Hey everyone, it's Julie here with TipRanks, and today we're taking a look at two green stocks that score a perfect 10. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two stocks that score a 10 out of 10 on the TipRanks Smart Score. This is an AI-powered data tool that looks at 8 unique factors and looks at a stock's likelihood to outperform the overall market. So today we're going to take a look at these companies, what it is that they do, and how Wall Street weighs in on their future potential. We found today's stocks looking at the TipRanks Top Smart Score Stocks page. Found under the Ideas tab, here you'll find a list of stocks that are currently scoring that 10 out of 10 rating. You can narrow them down by market cap, sector, and how long they've been scoring that 10 out of 10 for. And just before we jump into today's stocks, this is a reminder that if you enjoy the video, make sure you hit that thumbs up button and that you're subscribed to the channel. Let's dive right into our two green Perfect 10 stocks. First on the list, we're taking a look at FirstSolar. They trade under the ticker FSLR, currently priced at $205 per share. They've climbed 35% overall in the past year, but in the last 3 months have fallen a bit, dropping 7.3%. They do score a 10 out of 10 on the TipRanks Smart Score, with very positive crowd wisdom, increased hedge fund activity, and positive technicals and fundamentals. FirstSolar is one of the leaders in the U.S. solar power industry. Getting their start back in 1999, they're now an important producer of photovoltaic panels, the basic infrastructure of any solar installation. The company is the leading U.S. producer of such panels and holds an important international position in the solar power market. They currently have approximately 25 gigawatts of installed generation capacity and is on track to have 26 gigawatts by 2026. They've spent a cumulative $1.5 billion on research and development in solar power technology and are the largest producer of those photovoltaic techs. Just a couple of weeks ago, near the end of September, they opened up a $1.1 billion facility in Alabama. This fully vertically integrated thin film solar manufacturing facility adds 3.5 gigawatts of fully vertically integrated nameplate solar manufacturing capacity in the U.S. And in a couple of weeks from now, they'll be sharing their Q3 earnings report, which does follow an earnings and revenue beat for their Q2 back at the end of July. For their third quarter, analysts are anticipating earnings per share of $3.14, which would be a 64-cent jump from last year. This follows their Q2 earnings per share of $3.25, which beat expectations by 55 cents per share. Revenue also beat estimates, coming in at $1 billion, growing over 23% year over year. In the last quarter, the company did maintain their full-year guidance. In September, we had an analyst from Truist Financial initiate coverage on FirstSolar with a buy. They said that FirstSolar is a pioneer in thin film module technology, and the firm sees the company continuing to strengthen its competitive moat as geopolitical tensions coincide with pricing pressure in the silicon-based module supply chain. Ultimately, the firm sees this situation driving more developers to secure fully U.S. manufactured modules while limiting the ability for incremental U.S. cell capacity build-out. FirstSolar has attracted ratings from 23 Wall Street analysts and does come in as a strong buy based on 20 buy ratings and 3 holds. And the average price target comes in at $290 per share, implying an upside potential of 41.5%. Looking at those recent ratings down below, on the low end, we have a $250 price target here from Wells Fargo for an upside of nearly 22%, while our high-end price target is the most recent here from Morgan Stanley with an upside of 60%. And our second 10 out of 10 stock is ClearWay Energy. They trade under the ticker CWEN, currently priced at $27.81. They've climbed over 33% in the past year, and in the last 3 months are up 9.5%. They currently score a 10 out of 10 on the TipRanks Smart Score, with increased hedge fund activity, insiders buying up some shares, and very positive crowd wisdom. ClearWay Energy is an owner and developer of clean energy assets in the United States, and they are a leader in the global green energy transition. They have a large footprint across the Atlantic seaboard region, from New Jersey to New Hampshire, as well as in Illinois, Minnesota, Texas, and California. Their assets include commercial-scale wind farms operating in 13 states and similar solar projects in 19 states. They own 12 gigawatts of battery storage with operations, including deployment and development in 17 states. ClearWay Energy will be sharing their Q3 earnings report at the end of October. This does follow an earnings and revenue miss for their second quarter. For their second quarter, they reported earnings per share of 45 cents, which did fall 13 cents short of analyst expectations. The company did see adjusted EBITDA of $353 million, which also fell short, but management did say that following another solid quarter, they remain well positioned to achieve their 2024 financial objectives, and the company did reaffirm that full-year guidance. Recently, initiating coverage on the stock was an analyst from Jefferies. They said that ClearWay is a renewable infrastructure owner that stands out with consistent, steady, reliable growth amidst a peer backdrop of mixed targets and downward revisions. The firm believes the company can reach its 5 to 8% dividend growth target throughout 2026 without corporate capital needs, while contracting upside in California could further extend the runway. With 7 current analyst ratings, ClearWay Energy does come in as a unanimous strong buy. And the average price target of $34 implies an upside potential of about 22%. Looking at those ratings here down below, on the low end we do have a price target from Citi at $28, which is pretty much flat to current prices, while many in the double-digit upside, with our high end coming in from Oppenheimer at $38 for an upside of over 36%. So there we have a quick look at 2 10 out of 10 stocks that also come in with a strong consensus from Wall Street analysts. Let me know what you think about these 2 companies in the comments down below. I always appreciate hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock. Make sure you stick to your own investment plan and always do your own research and due diligence. Thank you guys so much for watching. I hope you have a wonderful day, and I'll see you back here next time.